As always, I'm going to be going over the S&P 500 E-mini futures for today, Friday, May 30th. I hope you guys had a great day today, and if you traded, were very successful. Um, I had a very successful day today. I just started off over trading. I over traded way too much today, and honestly, if I wouldn't have over traded, I think I would have been a little bit more comfortable staying in the market longer, and I think I would have been able to make more of a killing than I already did today. Um, Before I get started, as always, shout out Al Brooks. His course will be down below. He's the price action master, so if you want to learn from the best, I check that out. And a huge shout out to my mentor and teacher, Troy H. I'm actually going to give you some insight from my mentor that he told me yesterday that I thought about today. Uh, so I'm going to go ahead and get into it. As always, purple lines are the previous day high, previous day low. I'm now going to start marking the pre-market high and pre-market low with these orange lines. So these orange lines you see is the pre-market high and the pre-market low. So the market tested both of them today, which I thought was interesting. And then this blue line, I'll get into it once we get there. I'm going to try to make this quick, as always. If I, don't go into super specifics about certain things, I apologize. I'm just trying to make this fast and as least boring as possible to keep you guys focused and to keep your guys' time well spent. Well, so it opened up today, and I just had a very honestly, it's not always a good thing to have an outlook on the day. You kind of got to react to what the market does, but I had a very bearish outlook on the day because of kind of Trump and the problems that we were having with China with the trade deal. So I saw this automatic 15-point push down, and I really thought, okay, well, the previous day low is this purple line, the pre-market low is this line. It might try to test these pre-market lows very quickly. And then three came, which I looked at as a pullback failure. It tries to pull back, it fails. So I bought the close of, or like right open of four. And as you can see, it kind of ripped up. It was kind of very, like you can see I sold it here. And then it ripped up and it was really doji. And I was like, I'm in the market a little too early. I usually don't trade this early. I just have an outlook for the day that's kind of getting the best of me. So I got out break even on four. Um, but then after four closed to the downside, I kind of had the same thought process again, like, oh wow, this is confirmation of one pullback on three, second leg four. It's probably going to test the pre-market low. And looking at the sell point that I had, close of four, it would have been like exactly 10 points just to the pre-market low. So I just thought I'd scalp for 10 points, get a good start off to the day. So I entered in there, and once again, you can see I didn't like it when it went very well. I was about to tick off from hitting my full take profit. I probably should have just taken 5 points, but it clearly closes against my hypothesis. So I got out break even on six. So two quick trades, way too early. I think I was already trying to kind of force in trades in the day. And then we get a great reversal and get a massive micro gap on seven, and then a good micro gap on eight that closes above the EMA. So these two bars already are at the high around 19 points. So I definitely thought that this would get a second leg and a second push up at some point. The market regime, it was kind of bearish at this moment, so maybe not the greatest trade to go in, but I definitely could have taken a very good profit. But I'll get into that right now. So I had a buy limit order after eight closed right on the EMA that clearly got hit on nine. I thought it was going to push back to the EMA and reject it. And this was a very good indicator for me. It's now two good bars above the EMA, and then nine gets follow through with 10. So we have a four bar micro channel with tick gaps, three micro gaps that is 4 bars up. That's over 24 points. And then I think with these long distant measured boops, you either get a very deep pullback or a very short pullback. And once I saw 11 close, try to pull back to the EMA, completely failed. It's a very short close. I bought another contract here. And 12 I thought was good momentum going up. I definitely thought it was going to test the pre-market high. This is where I had my take profit, was the pre-market high. So as you guys can see from, bar 14, I was about only 4 points away from my full take profit, which I think was around 25 or 30 points. So I buy a contract at the EMA, I buy in on the pullback failure, and once I saw 13, I was a little sketched out, but I just thought maybe it had a little bit more of a complicated pullback. 14 goes. 15 I thought was the real pullback, so this is kind of a leg one with a couple inferred pullbacks, but looking back, it was now leg one, pullback, short leg two, pullback leg three, not really going much, really lost steam. Um, I think, some of these bars from yesterday were some resistance and just the resistance of the overall market starting very bearish. So I ended up taking a break even, um, break even on 18. So 16 rejected the EMA, so I still was pretty hopeful that I was going to get another rip up. But after 17 broke below, I just took break even on 18. I thought that was the best play. This now kind of entered this bear channel down. As you guys can see, you guys could say it's a trading range. I kind of thought it was like a wedge or a channel down. It was really respecting the top of this. As you can see, 23, 24 broke out above it. And as I've said before, 75% of the time a breakout happens of a channel line, it will come back to that channel within 5 bars. So I saw this double top on 25 here. So once I saw 25 ripping down, once it crossed the EMA, I sold 25 around here and just scalped a quick 5 points as it was going back into this channel. So then I was up 5 points on the day. And then I was going back down, and I thought this has a micro gap, and I think this gets 3 moves down. So I really liked this pullback, and I thought I was maybe going to try to break to the downside, maybe try to break through this bear channel. So I liked 18, I liked 28. So I sold that, but I really don't like these trades. Like I said, I think I was forcing trades, over trading. It isn't a clear indicator. And 28, and I got out break even, or actually, I lost 5 points. So I was back even on the day. So I thought it was going to be one pullback. I sold the pullback. I got a bad entry, as you guys can see, kind of down here. I lost 5 points, hit my 5 point stop loss right here. And then once this rejected the EMA and closed here, I thought, okay, this is definitely going to get a second leg. So I sold again on 29, which I think, this was just over trading. It was unnecessary. It wasn't a great leg down. It wasn't super clear. I could have waited a little while and had a way better trade, but I was kind of forcing it. So I lost another 5 points on 30. And in retrospect, if I would have just had a wider stop loss and been able to sit through 32, I clearly would have made a very good killing, because it did get this one pullback, tries to get a second leg, but kind of you could have say this is all just like a one complicated pullback too. What I thought looking back is that I in retrospect I was trying to trade a like third or fourth leg, because you have one pullback, two pullback, three deep pullback, four, or you could even say one pullback, two pullback, three, trying to trade a third leg. This finally breaks out of the channel and is probably going to return to the channel within 5 bars. And as you can see, it does that. So the next trade that I took was it rejected the EMA. It has this huge micro gap down. So I saw, it kept on trying to test the EMA and kept on not being able to break above it. Of course, it broke above it on 32, but quickly gets a rejection. It gets a very nice micro gap with a good close on 34. So I sold the close kind of like right at this beginning of 35, expecting it to get a whole lot lower. I thought maybe this sideways kind of up, 2 pushes up, 1, 2, up, may have restarted the leg count. And I thought this could definitely go a lot lower with how I was rejecting the EMA. Maybe not the best, hypothesis I had. Maybe I was, thinking a little bit revenge trading after taking those really bad trades. But I really thought that this was a big momentum mover. So then it gets a third leg. That's a good move down. This is now a 3 bar micro channel. And yes, you can say, and I was thinking it too, that this is still in this channel down. But I thought that this had enough momentum that it definitely needed somewhat of a second leg. And as you guys can see, it gets a huge breakdown. So I entered in another contract at the open of 36 because I just thought that now this was a 3 bar micro channel. It might have a little pullback or even a deep pullback, but I was willing to sit through it, and clearly it flushed down. So I made a very good amount here. And then I think this definitely now that it's a 4 leg micro or 5 leg micro channel, huge push down of over 40, at its peak, 50 points, that this definitely needs a second leg, even if it's a small non-symmetrical second leg. So I bought the pullback of 38 and then made another. I think I scalped. I didn't have the best entry on 38. I thought it was going to just free fall, keep on going, but I ended up getting 5 points, take profit on 41. So now I was up like over 20 points for the day. And then this next trade was a heartbreaker, but I'm going to get into that right now. So, and then it gets a nice reversal, 3 bar micro channel up with a great micro gap, and these all are closing on their highs. It's just, this is like one of those beautiful trades. You see over 20 point push up. Yeah, it's kind of against the market regime, but you have a double top here. You have all these pushes down. It's kind of exhausted. Like you could kind of tell that, 37 was exhausted, 41 was exhausted, and then it gets a double bottom here. Great momentum indicator there, and then it gets a huge micro gap, and all these bars are closing on their high. 3 bar micro channel, very, very high probability of a second leg. So as you can see, I got a good entry point kind of at the pre-market low on this pullback on 44. Me and my trading partner both took this trade. We actually entered the same exact spot. We were having a conference call while we were trading, kind of walking through what we were doing, what we were thinking for the rest of the day. And as you can see, it eventually gets, it goes one, kind of goes sideways into this channel, two, and it ends up getting a third leg up even, you could say. But I entered in here. I thought about entering another contract once it went above the EMA on 50, but it kind of turns into this upward channel. So I wasn't sure if this was a bull flag indicator, that it was going to, try to resume. Also on the 15-minute chart, you can see kind of where I entered was here, and where it was trying to push through the EMA, it kept on failing, and this could have been a good pullback for this leg. And yes, you could say this is 1, 2, 3 pushes down on the 15-minute chart. It's exhausted, double bottom, and I saw that, but you never know. This could have needed a new second leg because it was such a strong move down. So I was just being very cautious of that. So once I felt like it was at a good point above the EMA, I drug my stop loss up to break even, so I thought it was going to be a free trade. And my hypothesis was that it was going to try to cover not only the micro gap on 36, but also the micro gap on 33 earlier in the day, or on 34 earlier in the day. So I basically was in on a free trade. I was already up over 20 points on the day, and I didn't want to take any risk. And my trading partner actually told me right when I pull it up, he was like, hey, give yourself a couple points of a cushion just in case if it tries to pull back again. You never know. Just like make it an even 20 if you're up on the day, if your stop loss gets hit. And I should have listened to him because my stop loss break even literally got hit on the last tick of 52. And then it ended up doing exactly what I hypothesized. My trading partner stayed in and made an absolute killing, as you guys can see. But it broke through the micro gap here. So I kind of was thinking that this is one kind of complicated pullbacks, but even could reset the leg count here. And it finally gets good pushes above the EMA. So it's kind of like one, you could say there's 2, 3 in here, resets the leg count, and then gets another leg up with lots of momentum. Again, 4-leg micro channel up with a huge micro gap, tick gaps, bunch of them, 55 closes near its high, 56 closes near its high, 58 closes near its high. So another just huge momentum indicator. You could say that this is a second leg. You could say that the leg count restarted with all this, this channeling and kind of sideways movement on 45 through 54. So you could even say that this needs a second leg. And, after I saw it kind of go sideways again and get kind of a pullback, complicated pullback sideways, I texted my trading partner again. I was like, hey, I think this is going to try to test the pre-market high, the Globex high, which, is pretty crazy to think that that's going to do that after such a bearish day. I forget the exact percentage, but it's very unlikely if a day starts off bearish for it to have a complete trend reversal on the same day. And this is what happened. So yeah, it kind of went sideways, and I think that this got its second leg, or you could say even its third leg, all the way up to the pre-market high. But at this point, I was done for the day after I got stopped out here. I was like, okay, I'm just going to take my huge gain I had today, but clearly if I wouldn't have gotten stopped out there and I would have stayed in on this trade, I would have been able to make 30 or near 25 points on the micro gap being filled. And if I wanted to wait and see the pre-market high, I would have been able to make 50 points on top of the 20, I think 23 or 25 already made today. So definitely very interesting hypothesis again, like I talked about yesterday, that worked out, but I just needed a bit of a wider stop loss. I was trying to be too risk adverse. Sorry, I feel like I've been talking forever. I may have gone a little longer than I expected, but if you guys are still here and listening, thanks for sitting through my analysis. Please leave any comments or any thoughts that you have down below. Huge shout out to my mentor and teacher, Troy H., and Albrecht's course will be down below. I hope you guys have a great weekend, and I hope you guys had a very successful week trading. I'll be back again with more videos next week. Thank you.